Good afternoon, good evening, good morning, wherever you are. This is Mr. Shakespeare here again on the 23rd of November, 2023. I'm here with psychic medium and remote viewer Liz Cross. How are we doing today, Liz?
They're going to wonder why we're giggling. Because I just said, Mr. Shakespeare, I was like, what is this? And he started explaining it to me. I'm like, okay, confused.com. I just don't get this at all. But I think that will work in my favor in everybody else's favor when we probe this out, because I don't actually have a clue now what I'm doing.
Right. Okay.
And those of you that are new, one of the most powerful things you can do with remote viewing is you are totally blind to the information, right? The less you know, the better. So anyway, take it away, Mr. Shakespeare.
Okay, so this is another one done by the St. Louis Fed. Again, they do a lot of statistical analysis. They come up with all sorts of weird and wonderful things. They're very accurate what they do. This particular one is the 10-year versus minus the 2-year. So it's measuring the spread between the 10-year Treasury and the 2-year Treasury. Okay. And the idea behind it is that it's measuring, say, confidence. If you are, this is not the likes of sort of you and I, where we have a few $100s to invest. This is for people who have, many millions, billions of dollars or whatever, and they need to park it somewhere. And one of the safest places historically has been US Treasuries. Why? Well, because the US has never defaulted on their debt. Well, so, and unlike some other countries, and the idea is you always get your money back with some form of interest. Now, there is a difference whether you lend the government money for 2 years or 10 years, and the interest rates are different on the two, and they vary all the time depending on a million things, which we're not going to go into here. This chart just measures the spread between the two. And the important thing to look at, this chart is only 3 or 4 years old. We've only set the data at 4 years. When the chart is below 0, that is a good sign. When it is above 0, it is a bad sign. Now, people say that when it goes above 0, then there is the possibility that the Fed will reduce the interest rate because we will be going into some form of recession or something like that. And that's a signal perhaps that the Fed would want to pivot down and reduce interest rates. At the moment, it's very close to 0.05. So we've got a bunch of questions similar to the last ones, actually, to find out. Basically, what we want to know is if and when and by how far does it go above 0. So, Liz, grab the chart, please, and go out to 30th of December, 2024.
Okay. So this is called the 10-year Treasury
minus chart. The 2-year. It measures the spread between the two.
Okay.
Because they're both different interest rates. If you go and buy treasuries from the US government, you will get quoted a different rate if you want to buy a 2-year or a 10-year. There are other ones as well. There's a 3-month, there's a 1-year, there's a 5-year. Okay. 10-year has traditionally been one of the biggest bellwethers of how America is doing, if you like, and almost the globe. And the 2-year is almost the bounce off for that, because if I'm sitting here with hundreds of millions and billions of dollars and I'm thinking, oh, I'm a little bit worried about what's happening in the US, but I still need to do something. And I think, oh, in 5 or 6 years' time, the US might end up, fighting wars on God knows how many fronts, or doing this or doing that, and, something stupid. But I've got to put my money somewhere. So maybe I'll look at the 2 years. There are other options, and I'm oversimplifying this big time, right? But it's
Are
just
you, sorry, can I ask a question? Are you locked in if you buy the 2-year and the 10-year? I've never understood these. Are you locked in? So if you buy a 2-year, are you locked into that 2
so if
years?
you buy a 2-year, it matures in 2 years' time from the. So if you buy it fresh from the government, it'll mature in 2 years' time. Okay, let's say you bought it today, right now, it'll mature in 2 years' time. You
But
can't do
is
anything.
your
It doesn't
money
mature any
locked?
later. It can't mature any quicker or later. It's a 2-year fixed deal.
Ah, see, it's a
But
2-year
you
fixed
can
deal.
sell it. You can sell it.
But if it goes down, who would want to buy it?
Well, this is yeah. No. Okay, so okay. Look, sometimes the most important thing is not to make money, but it's to not lose money.
Hmm.
So imagine that you bought a load of bonds, you know, and they, let's say you paid $1 each for them, and you kept them for 9 months, and suddenly you were told they were worth a cent. You could be screaming and shouting all day long when you bought them. Oh, well, it's only paying me 5% yield or 6% or whatever. But now they're worth a cent. You've lost 99% of your money. Well, that's no good, is it? Nobody wants to do that. Okay. So these things are all about preservation of capital, not necessarily making too much. They want some form of return. Yeah. But sometimes, you can get 30-year treasuries. So you're
Hmm.
lending the US government money for 30 years at a fixed interest rate of whatever it is on the day that you buy it. Yeah.
Oh my God, it feels like it's going to self-destruct. Why would anybody trust 30 years? Okay.
Yeah, exactly. And a lot of people don't. And the problem is now that, the longer treasuries are much more difficult to sell than the shorter ones. Because let's say you buy a 3-month treasury, right? You buy it today for 3 months. At the end of 3 months, you could roll it over for another 3 months if you want. Yeah. Or you could take your money out because, something's gone wrong in the US and you've decided you want to invest in, I don't know, South Africa or somewhere. You buy their bonds instead. Yeah.
Okay. So can you only cash in these bonds on the proviso that somebody else has to buy them?
No, 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 no. These are issued by the US Treasury. The US Treasury will pay you out.
Oh, that's what I thought. Okay. All
No,
right.
no.
That makes sense.
However, if you buy a 2-year bond, you can't cash it back out to the Treasury 6 months later. You have to wait. It has to go full term. However, you could sell it to Bob and Mary down the street. Yeah.
How did you know that Bob and Mary lived down the street?
Well, because they phoned me the other day and said, would I like to buy some bonds? No, look, I'm oversimplifying it. Okay. Bob and Mary don't want to buy these bonds anyway. Look, you can have an account at the Fed, at the Treasury, and you can buy treasuries yourself. Okay. You can have your own account and you can basically buy treasuries, as many or as little as you want, and for whatever period of maturity that you want. You can do that. Every American citizen can do that.
Okay.
Okay. It's not a problem. But like the big institutions and things like that, if you buy a few $100 worth of treasuries, it doesn't make any difference to anything, right? But if Goldman Sachs buys $6 billion worth of something, on behalf of clients, then people might take notice. Oh, what's Goldman Sachs buying? That type of thing. So you're basically lending the US government money.
Oh my God. Yes. So,
Right.
okay.
And some people just think, well, why would I want to lend the US government money? All they do is blow it on unnecessary things. But that's your choice. You don't have to do it. But anyway, this measures the spread, getting back to the point, of the difference, right, between the 2-year and the 10-year treasury. Okay. And why that's important is because they have different rates at different times. And this is measuring the spread between the two. Okay.
Mm-hmm.
And this data, although it's produced by the St. Louis Fed, they obviously get this information from the Treasury, because it's the Treasury and not the Federal Reserve that issues treasuries. Yeah. Every country has them, you know. The Germans have bunts, we have gilts. I mean, they're all the same thing. They're all government bonds. Yeah.
Okay. All right. Well,
I have a funny feeling that over the next year or two, and this would be an interesting separate probe, I have a funny feeling that people will lose faith in governments, and as they find out what they've been up to, and all sorts of truths come out, and the government bond market starts going down badly.
hmm.
Bear in mind that the price and yield move in opposite directions, so you know they might have to offer a much higher yield to get anybody to buy them. I don't know. It's a separate probe. Anyway, let's concentrate on this one as we're
Okay.
going off
All
in
right.
yet another tangent. Oh
All
dear,
right.
like
Where are we
tangent,
going? What am I doing
tangent.
with this? I'm grabbing this chart. How far
Yeah,
out am I going?
30th of December, 24, please.
10 constant maturity minus the two. And that's what they call it. They just call it the 10-year Treasury constant maturity minus 2-year Treasury constant maturity chart. God,
Well, or as they call it, the T10Y2Y or whatever. Yeah, but
oh, T10Y2Y. Okay, that's doable. And how far? I'm sorry. How far am I going out?
30th of December, 2024.
Okay. T1 T10Y2Y T10Y2Y. Okay, I got it. December 30th, 2024, 6 p.m. Eastern Standard Time. What would you like to know?
So it's the same question as for the last charts. Okay, so in which month or months did this chart go above the zero line?
Go above the zero line. Did it go above the zero line in December 2023? No. January? No. February? No. March? No. April? No. May? No. June? No. July? No. August? No. September? October? December? Sorry, October, November, December. It doesn't.
Oh, interesting.
So what does that mean?
Well, okay, so if we're going into a recession, okay, then the line, you would expect the line to go above the zero. Sorry, you'd expect the mark to be above the zero.
Okay.
Okay, but bear in mind this is just one indicator. Yeah, it's actually good if that's the case, that that it doesn't do that. In fact, let's engineer another question out of that. In which month does this go the lowest below zero? Which month does it go the lowest?
Which
So
month?
we're now looking in negative 0.51, you know, that type of thing. Which month does it go the lowest?
Which month does this T10Y2Y chart go the lowest? December 2023. No, January. January 2024, February, March, April, May, June, July and August.
Interesting.
Well, let me finish out the year. September, October, November, December. I feel July, August.
Now that is interesting, isn't it?
Why?
Well, so July and August, this goes the lowest, which is the best for this. You know, the more times it spends below zero, the better. And yet, August 24 is when the other in, I know they don't measure the same things at all, but that's when we have a major stress thing. So is that and you're saying you think it's in the tech sector. So although the tech sector is big, it's nowhere near the size of the bond market or anything like that. So maybe it's an aberration insofar as something bad goes tech wise, and it could be really bad, but it doesn't rock the whole financial system because these things are staying below zero.
Well, and don't forget it was a recovery, quick recovery. It was
Yes.
like a knee-jerk reaction.
Yes. Yeah, that's true.
That's the thing. It wasn't, when the housing market crashed, when we've had like COVID, those were long-term things.
Right.
Whereas whatever this thing is in August next year, and that's based upon where we are today with quantum probabilities, right? The closer we get to August, the more clear it becomes. And maybe it doesn't even happen, but certainly where we are today, this is the most likely outcome. But
Right.
that thing in August, it basically it's a quick turnaround recovery. It's not, a massive crash.
Yeah. Yeah. I mean,
It's panic selling, and then panic buying.
yeah. Well, what this is making me think that we may well, not now, today on Thanksgiving, but maybe next week, we should have a little look on some more because there are many indexes we can probe, and indexes give you a much broader scope than individual stocks. Somebody could fall out of bed with and hate, say Tesla, and knock that one down. It doesn't mean the whole of the car industry is going to go to rack and ruin. No, it doesn't. So maybe we should find. I'll come up with some more index charts. Some of them may be funds related or not, and then that we might be able to use that as some more temporal markers, like the bellwethers, to see what's going on. Not that I think that much will go on next year. Like we said earlier, we've done quite a few probes, and really it's 2025, and as we know, 2025, the new Congress, the new regime, however that looks, takes shape in January, and then we go from there. So, am I expecting much next year? No, I'm not. Maybe we should.
Why? We have to call a hit on your charts. Remember when we said there was going to be something that there was a lot of negative transits for just around the middle of the month or just before the middle of the month of November. And there was like 3 or 4 days where the stock market was in the tank. I mean, it was terrible, but it quickly recovered. And your chart showed that the tanking and the recovery pretty much ended up being, flat overall. But you called that on your chart. So well done.
Oh, okay. Good.
You remember? And then we saw that Bitcoin, I think the Bitcoin actually goes up and everything else was going down as far as like the markets. And that's exactly what happened.
All right.
Those charts, they may not always reflect price points, but they have been very accurate, especially the last few months. They've been very accurate.
Yeah.
So there you go.
Yeah, well, they're definitely not. They're not price charts. They're astrological transit charts. So, but yeah, no, it's good when they go they go the way that we think they're going to go, if you like, But it's even better when we have synchronicity with what you're saying over it as well. That strengthens them immensely to me. Okay.
And even with the whole Israel thing, you know what I mean? Like, I just feel the markets have done responding to that.
Oh yeah, most of that will be priced in now. Yeah. Okay, that's
Wow.
it. Thank you very much.
Thank you. This is great. I like these measurements. Thank you.